All right, everyone, let's do a quick sound check. Good morning, everyone. Bernie, Bill, David, Lionel, Melvin, Michael, everybody else, let me know if you can hear me. Sally, fantastic. Hopefully everyone is doing well. Today is Tuesday, April 11th. And as you can see, I'm using and I'm showing you NinjaTrader version 8. For those of you who have the indicators, whether you're in mentorship from a year or two ago or more, or if you have the lifetime Atlas line, please contact me. I do not charge for updates. So if you have a lifetime license, even though you purchased it, let's say 5, 6 years ago, I do update my clients without any additional fees. So what I want to show you today is just the workings of NinjaTrader 8. It's a little bit different. It's not exactly the same, but the good thing is that if you're transitioning from NinjaTrader 7 to NinjaTrader 8, you're going to find the same style and configuration similar, which won't be a big deal. So for those of you who are trading NinjaTrader 7, slowly convert over. You can run both NinjaTrader 8 and 7 simultaneously for the moment, but then you're going to start looking more at the NinjaTrader 8 platform once you get more accustomed to it. So I have here on the right chart the trade scalper, and I have here on the left chart the Atlas line. Now when you add an indicator to NinjaTrader 8, it's very simple and similar. I actually changed my chart from looking black. I like the white feature here, but if you want, you can have it any color you want. Right click here on the chart and you choose indicators. And then here in this left menu, just like NinjaTrader 7, you have all your indicators. Now I've organized this a little bit differently, and the DayTradeToWin indicators are all grouped together. So I have here the ABC, I have the Atlas line, the at the open, the multi-lines, the news indicator, which I'll add here to the chart, the roadmap, mentorship, and the trade scalper. This is the demo version I'm showing you, and this is the original version that everyone who purchases receives. The same type of properties and parameters that we have here can be identified to add the colors, turn on or off the settings, so it's very similar. Very good. Excellent. Hey, Carell. Good to see you. Excellent. Okay, so what I'm going to show you here is basically looking at the orders that arrive on the trade scalper, the orders that arrive here on the Atlas line. I'll even add the at the open method, which is very popular. It's going to be brought back into the public. Usually I only offer it with mentorship. It's a great method, trading the at the open. It's been around for a very long time, and I've made a couple of adjustments and updated it. So here is the at the open method as well. We'll take a look at that and see what kind of signals we get for the at the open method for today. At the open, add it. Anyone have any questions for me before we begin? Fantastic. So today's class starts later in the evening for mentorship. I've been advertising the April 11th class here for about a week or two. If anyone's interested in joining, please let me know. I'm happy to have you join the upcoming class starting later on today. It includes all the courses and programs, and it's 8 weeks, 2 months with me. Now, when I look at the market, especially in the morning, I want everyone to remember that as soon as the bell rings, there happens to be a strong volatility type of buying and selling and battle. So don't get caught up right as the market opens. And you can actually tell that and see with the ATR here on the bottom, where it's relatively slow, and then all of a sudden it wakes up and it becomes very, very strong. So if you have a small stop, if you're using a method that only takes a small target, you may get whipsawed and chopped out of the market as well. Now, when you look at the first, let's say 5-10 minutes, hang tight, stand back, wait, until everything slows down, it calms down a little bit. And you should also be looking at some type of news indicator or news calendar to make sure that when you do enter into the market, it's not at a time where you have a housing report, a PPI, an unemployment report, or maybe even Janet Yellen speaking. Sometimes it's not listed as a red star or a red flag on the calendars, but Janet Yellen speaking does bring a lot of volatility to the market. As we continue here, we're looking at a few things. Usually, as the market starts trading, we have an opportunity. It's the volatility. It's everyone pushing the market either up or down. So look for an opportunity typically after the first 5 or 10 minutes after the market opens. The Atlas line typically plots a little bit later, about, let's say, 10 o'clock, maybe 9:55. So the Atlas line will only be shown in about 5 or 10 minutes. The at the open, the same thing. If there's a push as the market begins, let's take advantage of that at the open move. Now with scalping, there's plenty of opportunities in scalping, but you have to be careful. If you look down here at the ATR, the average true range, which I use in detail, and I teach this on how to understand targets, stops, overbought, oversold. The problem is that it's oftentimes too slow to trade. So if you realize that the market is slow, it's not worth the risk. So for example, when you see this type of activity right here, this is untradeable. So just remember the ATR is very important, especially with scalping. It should be half a point, 2 ticks minimum on most markets. 3 ticks when the market is typically normal or healthy. 2 ticks is okay. Less than 2 ticks, it's really not worth the risk. It's really too slow to do anything or trade. So just remember the conditions are relative. The slower the market, it's untradeable or take a smaller profit. The more volatile the market, be careful. It could be too volatile or it could be healthy, and you realize that here using the ATR right here. Let me just make these lines here a little bit thicker. Yeah, sure. If you do want to join up later today, there's still room. Go ahead, Markel. All right, Vivian, you got it. Just email me. I'll send you all of the information that you need to join up. Yes, does include NinjaTrader 8 indicators. That is correct. All right, so when it's too slow, we don't trade. When it's too volatile, we don't trade. So all this that you're seeing, the signals that you're seeing here, it's really too slow to trade. Now there's a filter built in to the Trade Scalper that allows you to say, I don't want to see any signals when the market is too slow. So there is a built-in filter that you can actually say, in this market, I don't want to see it. In crude oil, I don't want to see it when it's this slow. It needs to be at least 5 cents, 10 cents, 2 ticks, 3 ticks. And so if you see here, there's a filter here, this ATR filter that says, before any trade appears, I want to see, without a doubt, the market moving at a certain clip. All right, that's very important. Okay, so if you look at when the market is more of a normal type of trading environment, we're going to look at the US during the day here, and here is normal. Normal is above 3 ticks, less than 3 ticks. It's still tradable, but it would be only a 2-tick target. So if you look at this signal right here, if you're looking to go long, my only expectation, and you have to look at it as if we don't know the future, my only expectation at this point is that I'm looking at either 2 ticks or nothing. The same thing with this trade here. To go short, if I'm looking to take a trade, it should be 3 ticks, this short here. The same thing with this short signal right here. It should be only 2 ticks. So I know at any time what type of target or stop I should be using. All right. One thing that a lot of traders look at, and I think this is important, when you think about this idea of the market being bought overbought, oversold, or really too volatile, just remember that typically large candles don't follow through. There's usually a breathing period where the market catches up. So as an example, if you see this large red candle here, a lot of people may think that this is a continuation. The market's going to continue, the market's going to follow through and just keep on going lower and lower. Sometimes it could, but more often than not, there's a reversal occurring. So don't get lured into a trap, which is these large green or red bearish bullish candles that most of your indicators are going to say go long, go short, momentum, MACD, but it's really not the case. When you do see these large candles, typically the market stops, catches its breath. It may continue later or it may reverse, and that's where you have to be very, very careful. Also, if you take a look here at this signal right here to go long, where you're entering long is very important. If you're entering long at the beginning of a move, that's important. So if you see the little triangle there, it's telling you the entry to go long is at 23.50. That's the price. As soon as this large green candle has plotted, that's when the move is over. So you shouldn't enter after the fact or after it makes a large move. You should definitely look to enter at the beginning because at the moment the move is over. Just like the same instance where you see this large red candle right here, it's over. So when everybody sold thinking that this is the start of a large downtrend, it immediately reversed. So I want you to be very, very careful with that. Okay. Now there's some news here that is about to be released. So I want you to be careful with the volatility. If the volatility is extremely high, please stay out or be very careful. So overbought, oversold, it's definitely something we need to take into consideration. After you see a large red or green candle, take into consideration the move may be over as well. When you see, for example, a large wick, I want you to also think that the move may be starting to change. I call these yo-yo bars. And if you start seeing a grouping of yo-yo bars, remember that the market tries and fails and tries to continue through where it has already been. So if you're entering long or short after you see these wicks where the market has tried and failed multiple times, I want you to think about what's about to happen. It's internally changing, and this is all part of price action. So for example, if you see these wicks here, they're all happening at typically the same area. Here, 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 and then one last pump, and then it collapses. I start seeing wicks like this here as well. Think about markets love to test where they've previously been. If you see a grouping of wicks at the same general area here, at the same general area, as if it's trying and failing and immediately being popped back up, if you try to go short, you're looking at a battle between the buyers and the sellers. The buyers are overtaking the sellers. One wick out in the blue, it's meaningless. If you see one candle with one large wick, I mean, that could happen anywhere. But remember, a grouping of candles with wicks, that's very important because this is attempting, and it finally reverses. So take that into consideration, and then we have to put rules to it. Typically the rules, whether it's the trade scalper, it's the power price action, it's the Atlas line, typically there are 3 stops that everyone should be looking at. It should be based off of time. It should be based off of some type of catastrophic move where the market indicates that you're dead wrong. Don't lose any more money. This is the catastrophic stop, the last resort, which we don't want, by the way, but we have to have something to protect us. And I also like to look at proof. Proof is very important, and the idea is always to control your risk. So if I'm looking at just one stop, right? If I'm looking at just one one stop only. The only stop that I have is price. But if you use a combination of stops, whatever happens first will typically lead to a smaller loss, break even, or even, if you think about it, a potential target, a small target, or a break even trade. So remember, a grouping of these yo-yo bars as you see them here, it doesn't matter if it's an hourly chart, a 1 minute chart, it's all relative and it's price action. Really what it's telling you is that things internally are changing. And I want you to think about whether or not you should wait until it breaks through where these wicks have indicated the market is reversing, or whether it's better to hold off and see if a reversal is about to happen. Any questions for me? Okay. So remember, taking this short here on the trade scalper, right here, your target based on the ATR should be 3-4 ticks. The ATR is volatile enough that it can justify it. If that ATR was, let's say, 1 tick or 2 ticks, 2 ticks, okay, slow but okay, 1 tick, untradeable. Now, if there was a signal here to go long or to go short, as you see it here, it's the same thing. I know the market is healthy enough to sustain a target of 3 ticks or 4 ticks. If it was slower than that, not worth the risk. All right? Excellent. Very good. 3 ticks for you. Fantastic. All right, Larry. Good job. Anybody else take here 23, 43, 50? Short, you made your 3 ticks. And now I don't recommend re-entering. So the rules, as we learn, basically all the methods have similar rules, but I don't like to enter and re-enter the same trade twice. Once this is done, I look for the next signal. All right, James, send me an email and I'll send you the information, or you can visit DayTradeToWin.com. You can download the PDF, which has, it outlines the 8 weeks, what we learn during the 8 weeks. It's all recorded, so even if you can't make a class, everything is recorded for you. Now, the next signal, whether it be short or long, it doesn't really matter. I don't know the direction, but I'm going to look at a few things. I'm going to look at the volatility, whether the ATR is slow or fast. So what's the target? What's my stop? I also want to look at my stops. So direction in futures trading doesn't matter. What's more important is whether or not you can make the trade and fulfill a target. What are your stops and what is the risk? So it doesn't really matter the direction, long or short. You just have to put a set of rules and you got to follow them. Everything is mechanical. There's no subjectivity here at all. All right, we're going to see a signal here very, very shortly for the Atlas line and for the ATO. Price actions should be the same across all markets. We have to be more concerned with whether or not the risk and the target can be made. Absolutely right. Absolutely right. So these wicks here are indicating things are about to change. So definitely pay attention to them. Good. I'm glad you got that. Anyone have any questions for me, by the way? Based on what I'm showing you, it's not that difficult to be a trader. It's more the practice, the questions, ask lots of questions, send me lots of charts if you have any questions on whether or not you're doing the methods right. So that's very important. Don't jump into it. A lot of people try to enter with 3, 4, 5 contracts. When you start trading, it's risky. Start with one, be successful with one contract, and then grow into 2, into 3, but slowly, but slowly. Hey Phil, let me know if you can hear me. All right, very good. So we're going to see here very, very shortly a signal, Atlas line, a signal for the at the open, another signal potentially here for the scalper. I'm going to show you something else here, which I think is very important. When you look at manipulation that occurs in the market, a lot of people think manipulation is based off this idea that there's a conspiracy. But I think it's simpler than that. I don't think manipulation in the marketplace really happens as a conspiracy. I think it's basically what I've seen in the years of trading. It's who has the power and who controls the market. When you think about the market reversing as it does for no reason, sometimes you have to ask yourself, what would cause that? And I'll give you a very simple example. If you had an opportunity to realize that the market will stop, will reverse, or at least will stop and will not continue beyond a certain price, would you go against that? Would you actually say, I'm not going to follow this manipulated move and I'm just going to go against the strong buyers or the strong sellers that are impacting the market? And so when you think about manipulation, it has to be something that we know in advance, something that we can take advantage of, something that we could use as a filter, and also as an opportunity. So let me show you something. If I realized, I'm just going to go here to this 1 minute chart, if I realized that the market will, in the future, at some point, reverse, will I fight it? Will I fight the buyers and the sellers? Will I fight them? So let me add something here just to show you an example of something that I teach which is not really understood or taught by the mainstream. If I add here this opportunity where the market may reverse at a certain price, should I follow it and should I fight it? And so here, right over here, this is saying to me, my roadmap is saying, do not go short once it reaches here into my roadmap, because the market will, about 90% of the time, reverse or at least pause. So if you're about to go short, once it lands here in my roadmap, should you fight it? And I definitely have to say no. So if you're about to go short blindly, you're going to get run over. So I want you to consider whether or not using typical indicators, moving averages, MACDs, bands, if they take into consideration the outside influence, the outside force that exists in the market, which no one really talks about. And if you want to learn how this roadmap works, email me and I'm happy to set you up with a class on how this works. The same thing if you were short and you're short and you're short, and as soon as the market reaches inside my roadmap zone right here, isn't it time to get out, knowing in advance that the market will reverse at this point? At least for the moment, I'm not going short. So any signal that you have, you will avoid going short. You're looking only for long trades. And the same thing is true if you take a look here at, for example, let me show you another example on how this works. Just take some random day here. Typically during the day is much better. So if you take a look at this here, can I go short on this signal? Well, it's not interfering. So you have to think about, is it interfering with the roadmap? No. So as long as it's not in this area, you can go short. As soon as it lands in this area, you are out of your short position and you're not looking to go short at all. You're looking to go instead long. The same thing with, let's say, an opposite signal. You're long and you're long and you're long and you're still long, and finally it hits my roadmap zone. Should I be long the market? It doesn't matter if it's the Atlas line or if it's the ATO or if it's any signal. And the answer is no, because all of the sellers are going to step in and take profit and manipulate this market and reverse it. And that's why when you see the signal here to go long and to go long, you're avoiding the manipulation that's happening. Instead, the roadmap is telling you, which is much stronger, to go short. So you have to understand that it's not just moving averages crossing, which I don't use any moving averages or any Fibonacci's. I don't use Japanese candlestick interpretation. I want to teach you something else. I want to teach you about price action, the manipulation that occurs, and then putting rules to it and saying there's a stop, there's a target. Is the market overbought, oversold? What's the risk? We have to know as much as possible about the trade before going long or before going short. All right. Now the same thing here. Here is a strength trade. It plots, the Atlas line plots the strength trade. It's telling me to go long. But again, before you go long, before you jump in and just say, I'm just going to throw myself into the market, stop a moment, wait a moment, give it a second. You don't have to just jump in. It's unnecessary to risk our money unless we know the full story. Before you jump in here on this strength trade, what is the risk? Well, if you think about risk, risk is I'm going long here. I want the market to go up. What is my stop? I never risk more than 3 points on these strength trades or pullback trades. And if the risk to the downside, where the market wants to test where it's previously been, is more than 3 points, or really more than I'm willing to risk, it's not worth the trade. So in this case, I'm not sure if you can see that, but it says 4.25 points. So I already know that this strength trade, maybe it's going to be a winner. It's possible, but you avoid it because the risk is not worth the trade. So even though it goes up, I'm saying right now that just based on the information that we have, it's really not worth the risk. Yes, these are the configurations, correct. If you, right, exactly. So you can have the bounce trades on, the pullback, the strength. You can adjust this any way that you want. The filter when the market's too slow, right? So yes. Yep. Okay, so 23.43 to go long the market. Based on what I teach, we don't have any information except for news and the current conditions, 3 points. So I know right away my opportunity is 3 points on this market from 23.43. Right now it's moved about 2 points only, 2 points. I want you to consider a time-based stop, a prove-it stop, and a catastrophic stop. I want you to consider whatever stop happens first is your exit strategy. It's not just price, it's a combination of stops. So when you do go long, risk, overbought, oversold, why am I entering? Is there news? All of those questions have to be answered. Let me show you this one. I have a question here on the Atlas line back end. I'm going to try to move this out of the way here so it doesn't interfere with what we're seeing. See, like this? Yep. Okay, so to answer your question, when you look at this here, the only, or more importantly, the only signal that you should be looking at is the double bar long, double bar short, which is the main signal, the Atlas line long and short. And I also want you to look at the pullback and the strength trades. The bound trades are good, but I usually turn them off. You can have a sound file for an alert, and you can change the aspects of the Atlas line and update it throughout the day as well. You can update the Atlas line throughout the day. If you need to look at the Atlas line, let's say for the midday or for a late day rally or a late day sell-off, it's very easy. We would just update here the time right here, and you'd say, I'm looking at now at what happens towards the end of the day. You would update the start time, the calculation for the Atlas line. That's accurate. That's correct. Looking at Thinkorswim right now, Michael, it's possible. There's very little licensing options for Thinkorswim. What a lot of traders do that have Thinkorswim or other charting platforms that we can't support is that we provide NinjaTrader for you, including live data. You will also be able to use both platforms simultaneously, looking at the Atlas line and then trading on your Thinkorswim. Or maybe your broker could offer NinjaTrader as well, but at the moment it's not available for Thinkorswim. It's really because of the licensing aspect. We can't license it with the Thinkorswim platform. And we've spoken to them about it already. You see here the roadmap right over here that indicated don't go short, only go long. Okay, so what if you had a forecasting agenda typical with manipulations about to happen into the future? So I'm going to add here the roadmap to my 5-minute chart with the Atlas line. And now, if I know into the future that the market will stop at my roadmap level, why should I go short knowing that the market will reverse? I will be very cautious in taking a short trade. So if you're going to go long, you not only have the Atlas line telling you to go long, unrelated to the roadmap telling you to go long, you have two things. If you're going to do anything, long is the only trade to take here at the moment. The target, I mentioned to you that it was about 3 points, 12 ticks, so 23.43 quarter. The market went 4 points. So your target was hit within your time-based stop, and you're done. You're finished. There's no other signal at the moment until the market does something else. It could pull back, strength trade, it could scalp. So I want you to not take multiple trades based off the same signal. It's a once and done idea until the next signal comes about. So the calculations are based off of price action. So I would not, if it comes back down to 23.43 quarter right here, there's no reason to take this long yet once again. You don't do it. Okay? Strength trade, I mentioned to you that it was risky. It still worked here to go long, but I avoid the strength trade if the risk is too much. It's just smart. As a trader, you have to pick and choose the best trades, not every trade. Questions for me, Michael? James? So we do offer, I'm not a broker, but I do offer, and I install small staff, Chad and Victor, a few of us here who definitely support our traders with the remote installation of software, the courses, the indicators. So if you're not computer literate, let's say, with installations, we do offer that free of charge. All right, 23.45.50 long here. If you look at the ATR, 5 ticks, that means I have the opportunity to make 3. That's all I'm looking for is 3. 3-tick target. Very good. Very good. It's okay if you didn't take the full 3 points on this trade and you just took 2 or 2.5. That's fine. You still made something on this market, but I know 3 points is possible. So if you're even what's called front running or taking a smaller target, I think even better. You have the opportunity to reach it faster. That's no problem. Okay, Rebecca, thank you. All right, excellent. All right, 23.45.50, 3 ticks, 45.75, you're out. You're done. You should not be in this trade any longer. So this is done. This is done. Roadmap long. Roadmap long. Atlas line long. Now, today is a great day. Everything is working out, but let's be realistic. It's not like this every day, right? I want you all to expect there's going to be difficult days. The market's going to give you a stop or a loss. I want you to be realistic. This is not pie in the sky, 100% accuracy. If anyone ever says to you that trading is a surefire thing, obviously be realistic. It's not really how it's done. But if you have rules and you understand price action, then you have a starting point, and then you take it further, and then you start practicing, and you ask questions, and you send me charts. So the signals themselves are part of the course. The software is part of the course. I teach everything manually, so you don't even need the software. The software is there just to make it easy. Everybody wants the easy button, so the software gives you the signals. But in reality, Everything that I'm doing here can be calculated manually and is taught. There's nothing that I hold back. So you actually understand the method, why, how, where, all those questions that it makes learning these ideas very simple. I'll send everyone a follow-up email. If you have any questions, email me. Today's class begins at 6 o'clock. 8 weeks, everything is included. Roadmap, Trade Scalper, at the open method, all the courses, the software. I'll look for your email. You got it? Absolutely, Frank. 2 ways you can join the mentorship. It's twice a week on a class. So 6 o'clock, Tuesdays and Thursdays. It's recorded for you. So if you can't make a class, it's a small class. We're talking about 3, 4 traders that we meet, and we join together, share my chart, I record it. So twice a week, 1 hour for 2 months, 8 weeks. The other version of the mentorship program is a one-on-one, where it's just you and me. And so we meet on specific days that you need, sometimes even if it's a weekend, or if you need to meet in the early morning or after work, let's say. So the one-on-one mentorship is just you and me. The class, we teach and you get the same material, so there's no advantage as far as the material. Everything is taught in the same exact way. It's just the scheduling. It's just you and me one-on-one. It's recorded the same way, or it's a class but set days and times. That's the only difference between the class mentorship and the one-on-one, but the course's software, the support, the setup, everything is included with either the one-on-one or the group. All right, so if the market starts to go down and continues lower and lower, fantastic. We're going to get some short signals. This has already happened. The manipulation has occurred. It's over. So I'm not looking for this to be old support. I'm not looking for this to be new support. I'm not looking for this to be anything. This happened. I stayed out of short positions, only looking for longs. Now it's on a new track. The market's doing something else. And the best thing about trading with price action, the way that I teach it, is that there's absolutely no optimization. You don't optimize anything. Today it's not a certain value. Tomorrow it doesn't change. It's set in stone. This here, it's over. The entry 23.45.50 for 3 ticks is finished. Yes, so scalping is, it happens, you're in, you're out, you're done. You don't take it a second time or a third time, it's finished. Now we look for the next move. It could be short or it could be long. It's all depending on the rules and the mechanics of the method. But as far as this here, you're in, you're out, you're done. Even if you entered here, it made the target. So there's no reason to re-enter the same trade twice. Roadmap updates in real time, James. Correct, it does. It's real time. All right, everyone. One last thing I want to leave you with here today is that overtrading is a bad idea. The more you trade, the more risk you're really creating for yourself. So let's keep it simple. 3, 4 trades a day, stop. Even with scalping, if you have 3 or 4 winning trades in a row, the more you trade, you can give it back as we get into the middle part of the day or in the later part of the day, the afternoon. You can give everything that you made back. It happens to everybody, it happens to me. So the less you trade but more accurately, the better off you are. And really, we don't want to make our brokers rich. And the reality of trading, it's you're trading for a certain number of points or dollars and then stop. And if you continue, the only thing that you're doing is just risking what you've already made. So for today, Atlas line, the roadmap, trade scalper, there's 3 or 4 trades here, easy. If you're up for the day, stop. Go enjoy the sunshine outside. It's not, trading is a lifestyle. It shouldn't be sitting in front of a computer all day long and 24 hours a day and being stressed out. It should be really looking for the best opportunities. Typically the first 2 to 3 hours in the morning are always the strongest for volatility, the best for opportunities. If you're up for the day, stop. And if you do have any questions, please feel free to email me, support@DayTradeToWin.com. I'm happy to make sure that my program is right for you as well. You got it, Carol. Take care, everybody. Bye. Bye-bye now.